Hey, 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 Blockchain Bernie here, broadcasting live from fabulous Las Vegas. Stablecoins, USDC has been depegged. Man, that is a scary event. Does that mean we all want to go out of USDC as fast as we can? That's what we're going to talk about today, and I'll give you some details and backgrounds on that. So if you like content like this, don't forget to give it a like and subscribe to my channel. It really helps the algorithm. All right, so USDC is operated by a circle, right? And that is, Circle is, the most transparent of all these stablecoins, right? So I loved USDC all around, but man, it got depegged. It went all the way down to, 88 cents or something like that, and it's supposed to be $1 all the time. That's why it's called a stablecoin, right? So how could all that have happened? And does it mean it can depeg again anytime soon? Does it mean it's more prone to get depegged than the other large stablecoins, right? So we're talking about USDT, which is Tether. We're talking about BUSD, BUSD, which is the Binance USD, which is basically a branding of the Paxos stablecoin. And, we're talking about DAI and all these other stablecoins. So as we all know with Tether, we don't know, do they have 100% reserves, right? So why are these reserves so important? There can be bank runs, as we saw last weekend with SVB Bank and with Silvergate Bank before, and then, so many banks getting into trouble because of bank runs. So that means, with regulated banks, they need to have 100% of their deposits in reserves. So even if everyone would just on one day or in 1 second want their deposits back, they need to have all these reserves, and they need to report to the government and all of these things. And Circle is the only one that voluntarily does just that, just as a bank. They have 100% reserves, and they publish everything, and the government looks into it, and that's why I love USDC. But it was still getting depegged, while USDT and BUSD, I think BUSD, BUSD, they got depegged a little bit on that weekend, but not as much as USDC. So what happened with USDC, they have all their reserves, right? They have it in US treasuries, and they have it in cash. So those are considered safe assets, right? But as we learned last weekend, cash is not always super safe, because you put it in bank accounts, right? With regular banks, regulated banks, right? So SVB is a regulated bank. And let's make that clear. They need to have and do have and have been having at each and every point in time at least as much reserves than they have in customer deposits, right? So they have always been able to pay all customer deposits out of their reserves. But they had a certain percentage of their reserves. It was like 7 or 8%. They had it with SVB, Silicon Valley Bank, right? And Silicon Valley Bank got in trouble over the weekend, right? So they had, put the customer deposits into safe assets, and the safe assets were U.S. treasuries, which are super safe, but they had a longer term, right? Because they bought these when interest rates were super low, so they bought it with a little bit longer term to get a little bit higher return. But then when interest rates went up, that means the prices of these treasuries go down. So they had to hold them to maturity, right? So they said, well, we don't care if prices go down because we don't want to sell them anyway. We hold them to maturity. and maturity would be a few years out. So now what happened is like people pulled out their deposits, right? And they pulled out their deposits because, they get higher interest somewhere else, or, maybe they got scared when they looked at the balance sheet of SVB Bank, which, is public. It's a public company. So, and then, the more people pull out, the more the fear spreads, and then other people pull out, and that's called a bank run, right? And that didn't work out well for SVB because they had to sell their treasuries now, and they had to sell it at a loss, right? And then they published that information, and then everyone was even more scared, and the bank run gained steam, and that led to regulators actually taking possession of SVB and making all depositors whole. So the government reacted in a very, very swift manner and with a very, very measured approach, in my point of view. So all the shareholders of SVB Bank lose their money, and the management loses their jobs, but all the depositors get their money back. With SVB Bank, let me say a few words about that. Silicon Valley Bank. I've been approached by them with my previous startup companies a couple of times, and they have a strange business model, and that's not public anywhere in the press. So it's kind of a secret that I'm telling you now, right? But mostly their business model is, if you as a startup company get venture capital from one of the top venture capital companies in Silicon Valley, right? Let's say you get $10 million in venture funding, right? They give you a loan of 50% of that, right? So when I raise $10 million from whoever, Andreessen Horowitz, they give me $5 million extra on top of that as a loan. And that is literally their only criteria for underwriting that loan. They don't look into anything, right? The only thing, if you don't get venture capital, you don't get a loan from them. Zero. You don't even get a credit card from them, right? They don't do business with you if you haven't raised venture capital. But if you have, they don't look at anything. They don't want, audited financials from you or anything. It is enough that you have raised venture capital. And they have been telling me, if you've raised venture capital, they do all the vetting, right? And we just believe that. So how great the vetting of venture capital is, we've seen that with FTX and everything, right? So it's probably the worst vetting out there in the world, right? And SVB was only trusting that. And, for in my point of view, the other despicable thing that they do is you get that loan, but only if you put all your money into SVB, right? So when a startup raises 10 million, they just basically have to put their 10 million into SVB. That's why their deposits grew so much, right? And they couldn't earn any return on their deposits because, they only give a few loans, but most of these companies, don't take their loans or stuff like that, right? So the only way they saw is making a little bit of profit is like using those longer term U.S. treasuries. And, with that extreme action of the Fed raising interest rates so fast, it ended in disaster. And now getting back to USDC. So that meant for USDC that their deposits were in danger as well. And that became public on, Thursday, Friday last week. And then obviously people got scared. Is USDC still safe if 8% of their reserves 8% of their reserves means they can still pay out 92% of all deposits, right? So even if 92% of people want 100% of their deposits back, they would have still been okay, even if, that money would have been lost. But over the weekend, the government acted all the depositors were made whole, and, Circle got their billions of dollars that they had with SVB. They got it back, and they have it somewhere else now. So everything's 100% restored with USDC. Can this happen again? Of course. I mean, everything can happen again. It's definitely way tougher now because the U.S. government has kind of given a whatever it takes statement, right? So all deposits with the U.S. banking system are safe. So I don't think it's going to happen again that soon. But can it happen with the others? So now the psychology is, USDC got depegged. Tether did not get depegged. So I'll better put my money into Tether and get out of USDC. I personally think that would be very short-sighted because still USDC is the most regulated, the most transparent of all stablecoins. And Tether, is not as transparent, right? They have been asked so many times by several government agencies to, be transparent about their reserves and, where they have put the reserves and stuff like that. And they are never 100% transparent. So I'm not even sure if they have 100% reserves. So if a bank run happens to Tether, we don't know what happens, right? If another bank run happens to USDC, well, they have 100% reserves and, they have U.S. treasuries and they also have bank deposits, but the bank deposits, as we learned, are safe. I don't think USDC will put it in any bank where they are not safe, but I personally believe all bank deposits are safe anyway because the Fed and the federal government will just protect it, right? So USDC, in my view, still the best stable coin with BUSD, BUSD, which is basically under the hood Paxos, the Paxos stable coin. They are being scrutinized by the U.S. government anyway, so there are also some transparency issues and things like that. They got a little bit slightly depegged also over the last weekend. So, yeah, it's USDC is definitely the better option compared to that. And USDC is also the better option compared to Tether. So I hope you like this content. If you do, don't forget to like. Looking forward to the next video on Saturday. Don't miss it. So please subscribe and hit that bell notification. Thanks for watching and catch you later.